the ones in Australia as well over the last 5 or 6 years or even longer now. So they've been fairly much a graphite specialist engineering firm, and yeah, they haven't seen a project with this level of, they think this is the best project basically.
Nice.
Yeah, so I guess here's a slide showing the overview of the project. I guess it's a very low technical risk project. It's got a very large and extremely high grade deposit, which is outcropping from surface. So it's a very simple process to mine when it's sticking out of the ground like this is, particularly when it's on a hillside. It's project's located in East Africa, which is the world's largest graphite province. And over the last, I guess, 5 to 10 years, there's been numerous world-class discoveries in that province from, probably 5 or 6, even more. So it's pretty much in the heart of the world's best and largest graphite province. And not only the biggest, it's also the highest quality graphite in East Africa. So it's really an excellent place to be if you're looking for graphite. The DFS, the updated DFS showed NPV $430 million US dollars with a low capex, less than $40 million. So it's more than 10 times the capex the NPV is. So pretty unusual to see ones like that. And on top of that, demand for graphite is really growing dramatically as EV sector takes off. So it's in a pretty good space.
This slide shows a bit more on the numbers, Matt. So, I think everyone's pretty familiar with the numbers, but maybe you could go into, how they're put together and, what they actually mean and how they might compare against other projects in the region. Certainly just for a start, and I can, if I unmute everyone, then people can ask some questions specifically on the economics.
I think a useful thing to know, Sasha, would be how why the capex is so low. We don't often see this in mining projects, a ratio of something like less than 1 to 10. So, what makes the capex so low in this project?
The main reason is it's a very simple process to upgrade the graphite from very high grade, high quality ore up into 95+%. So it's very easy to process the ore. The ore is very high grade and it's on the surface with a very low strip ratio. So that's what's the driver of the project economics, like very high grade on the surface, low strip ratio, easy to process.
So things like, you often see, a lot of the capex comes from things like, infrastructure build and stuff like that. Is that also sort of, favourable in Tanzania? Is a lot of that in place already? Has that helped keep capex down?
Yeah, it's very well located in terms of infrastructure. Mahenge is a regional town in Tanzania. It's about, I think it's 8 kilometres away from Mahenge. When we build a road directly to Mahenge, it's a bit longer without that road at the moment, but it's close to a major centre. It's got power, it's got workers, it's got a road to the port, to a deep water port. So a lot of the infrastructure needed is already in place. And obviously Tanzania has been a mining destination for 30 or 40 years with a focus on gold. So they've got a lot of mining infrastructure, all that kind of stuff is already in Tanzania. So it's not like going into an undeveloped country. Yeah, I guess the project is one of the largest, highest grade projects in Tanzania. It's got extremely robust DFS, and for 2020, we're looking at really kicking some more goals with environmental and social permitting, conversion of offtakes into binding agreements, commencing the FEED study, which is just a precursor to construction, as well as getting the project development funding tied away later this year. There's a lot of stuff happening.
On the project development funding, obviously you're saying getting that tied away sort of by the end of this year. can we expect to hear more news on the funding process from here onwards? Like, so will it be sort of bits and pieces that you'll be given to the market? Because obviously you've got like a couple of NDAs in place. You've got Asian interest. Do you think some of those things come out in news flow, culminating in a final package?
Yeah, when we get a bit closer to some resolutions, we will be releasing that. And we are getting a lot of interest, and people are calling us asking how to get involved with the project, who have a lot of experience in developing mines of this size or bigger in Africa already. So it's generating a lot of interest. And both of those groups contacted us. Those groups interested contacted us without us going to them. So people are asking how to get involved with the project.
In what capacity? Is that for a funding capacity, or is that for offtakes?
Funding mine development.
Right. I think this is a key slide. I think it kind of captures what we've done and where the company is going. So I think this is where, if anyone has any questions, it's probably the time to ask. Do you think? I don't know who that was talking there. If anyone has anything.
Matt, it's Andrew speaking. Just looking at your your offtakes, you've got 4 there.
Yeah.
Under MOU. 3 have been RNS. The 4th hasn't. Can you just shed a bit of light on that?
Yeah, we're talking with some different groups at the moment, and some of them may go straight to binding offtakes. We're just hopefully having something on that in the very near future. So,
right. Okay. So, I mean, I noticed that essentially you've got more, the people you speak to is more than your actual capacity. So there's a little bit of competitive friction there. Is that working in your favour? Are you finding at the moment?
Yeah, there's certainly a lot of demand for high quality graphite, particularly in China at the moment. That's where almost all of it's being tested now. So we've now increased our capacity higher than our MOUs. We originally had 122%, but now we've increased our production to 120,000 tonnes a year after year 4. So we will need to find some more MOUs, but we're pretty confident we can.
Right, got it. Okay. Interesting, thanks.
No worries.
Matt, Sasha, what's the difference between just outline? I mean, the binding offtakes and the MOU offtakes, and how that kind of feeds into it. I mean, is it necessary for the funding participants at this stage, or can you just go through the I'd say the de-risking? I mean, I don't know the answer. Just wondering what the different stages are between signing an MOU and a binding offtake, and how that does it affect your ability to fund or borrow debt, or just strengthen the investment proposition overall?
I guess it's a bit of a chicken and egg situation with the people buying the graphite, doing the MOUs want us to be able to show that we have funding to be able to develop our deposits so that we can actually produce the graphite for them. If we can show we're getting closer to getting funding, it's going to be a lot easier to get binding agreements off of offtake partners. And the funding groups generally want to see that there's significant process towards getting binding agreements in place, because they want to know that we're able to sell the product for the price that we're suggesting. So they're confident they can get their money back from what they invest as well. So okay. I guess we have to be progressing the project forward, getting the environmental permits, mining license, getting everything ready on site, so that both parties can be confident that we're going to actually be able to produce the graphite and also pay back our funding groups.
Right. Okay. So I think another key question is on the funding, and where you are with that. You've hinted that are you talking to EPCMs or engineering groups, and you've also hinted that you've got, I think, a number of parties. So where are those discussions? What's going on? I understand this is like it's a long process sometimes, but where you are, and I noticed there've been a few other deals in the region as well, which is probably quite very encouraging.
Yeah, we're going through the due diligence process with with some groups at the moment. There's certainly some pretty strong interest from numerous groups.
Okay. What kind of forms would that take?
It'd be a mix of equity and then debt, potentially project level funding as well. So both of the main groups we're talking to are already developing mines in Africa with similar size projects. So they know how to put the packages together so we can get project funding.
So the people you're actually talking to then on the financing side, you're saying of already financed or are working with existing mining companies in Tanzania?
Yeah, I can't say too much about how advanced those talks are at the moment. We haven't announced anything about that apart from we're in NDAs.
Yeah, no, I just thought you said that they were, they were the people you were talking
advancing
about.
Projects in Africa. Yeah.
Yeah. Oh, okay. Right. Okay. So you can't say any specifics. Okay. It just sounded interesting. Right.
May I ask what's meant by commence feed to construction? What's feed?
Final engineering and design. So that's the process you do after you've basically typed up everything, so you know exactly what's needed before you start construction. It's a stage between feasibility study and commencing construction. So you make sure your plant is exactly the specifications needed to the nth degree.
Thanks.
But almost all projects have that stage in them after TFS.
So it's essentially like a bankable feasibility study where you're literally, right down to screws to put your buildings together. I mean, it's
right.
Absolutely everything. And when, how long do you think that would take? And when do you think that you'd have that completed?
It'll be done in conjunction with the next round of funding. If we get the funding in place to build the mine, we do that study as part of the construction process. We wouldn't commence that until we had funding.
Right, got it. Okay. Just going on to the mining license. I know you applied for it at the end of June. You're also talking about other permits, like water permits, environmental permits. Is that are those all separate, and have those been submitted?
Yes, they are separate and they've been submitted. So that process is advancing well at the moment.
And is that a similar timeline to the mining license? You sort of pretty much get everything all at once, or does some take longer than others? Or
expecting to get them all in a similar time frame, which shouldn't be no gap between now and achieving the permitting. We've already done the work previously, I think 2019 or 2018. We wanted to include this updated study in our permit so it would reflect what we're actually doing. We wanted to increase the size of the was in what we submitted.
And the target is to have all that done essentially before the elections in October.
Yeah.
I think is that looking likely, or
we're pretty confident? Yeah.
Right. Okay.
The permitting process has improved enormously since 2017 when they changed the laws there. So I think they've worked out. It's much more streamlined. They really know what's required and people know what to do and how things are going to move. So.
Yeah, I noticed from the official website that some of these permits are being done in just a month. Is that realistic, or is that a bit optimistic?
A month is a little bit optimistic, but the process is known and it's a proper process which people know how to do it, how it's working, and what the government requires. So it's now a streamlined process.
Right. Okay. Okay. Thanks.
All right.
Any more questions on this slide?
Matt, it's Tom Griffin. The numbers of this project are compelling. They're almost too good to be true. What's your biggest concern about the project at the moment?
Well, I guess I'm backing it up. I think it's going to work. I think the project economics is so compelling that it would work almost any reason. I can't see why it wouldn't work. It's got very low technical risk. It's extremely high grade. It's in a country with a lot of mining experience. Graphite demand's picking up. It's extremely high quality graphite as well, not just high purity. It's also very high quality. So even if prices do drop, we're going to be one of the ones in most demand. So that's why I've really backed it, put a lot of money into it, and come onto the board to try and push it to the next level.
And could the political risk with the election coming up in and sort of later on this year feature? Could that be a problem? Are you envisaging any issues there?
No, I'm pretty confident that it's gonna run smoothly, and we'll continue with the same government in place after the election as we had before it. So I can't imagine that would cause many issues.
Do any other board members plan to increase their stake in the company?
I think the two of the ones that have been on there longer have been buying up stock in most of the raises that have gone through. So larger shareholder and I have been putting money in consistently, more money in over time. But all the 4 people in the management team that have been there longest have all put in substantial amounts of money over time. That's why we have a fairly big percentage of the company now.
Yeah, you sure do.
Shall I move on?
Yeah.
Okay. You've got a nice picture of graphite. An EV here, so that's the graphite market.
As we can see from this graph, the demand for graphite is closely tied to the EV revolution and demand for spherical graphite, which is used in car batteries. So you can see the demand for a lot of minerals and graphite, nickel, aluminium, copper, lithium, cobalt. They're all demands going up dramatically, and graphite's probably one of the largest increases in demand. So it's really going up dramatically between 2015 and 2030 when we'll be producing.
Matt, what's your thoughts on like spherical graphite for batteries? We know that there's going to be demand for that. What's your thoughts on how important natural graphite is going to be to the end consumers, whether it be China, India, the US, versus whether they can make synthetic graphite, which essentially competes with natural graphite? I know it's more expensive to make synthetic graphite, but do you have a view on, because this is going to be key for investors, do you have a view on what the actual demand pull on natural graphite is going to be? Do you see that sort of expanding and synthetic graphite production reducing due to green, wanting to be greener and what have you?
Yeah, I can see that when East African graphite comes on board over the next over the next 5 to 10 years, graphite from that region is much more suited to EV market because it's much higher quality and much higher purity, which is the key for EV batteries. It needs to be 99.95% pure to be used in EV batteries. So if the market when the market from East Africa comes on stream, it's going to start replacing some of this synthetic graphite because it's cheaper, easier to use.
So basically, the natural graphite, if you take a high purity graphite, which luckily Mahenge has, and you upscale that to battery grade 99.5%, that process, the buying the raw material, raw concentrate, and upscaling is cheaper than the actual synthetic graphite production in the first place.
Yeah,
right?
It's far cheaper to do it that way, particularly if you're starting from a high quality product, which is why the price of high purity graphite is much higher than lower purity graphites.
Yeah, and this just comes on to another point. Obviously, I don't want to monopolise the call here, but I think this is quite interesting. Is that Sierra Resources over I think it was last year, they had to ramp down their production because they weren't achieving say basket prices for their graphite that they had anticipated. and they were trying to service the battery sector. Now, is that due, do you think, to the fact that they were starting at much lower purities and therefore it was, a less appealing product to off-takers?
Yeah, it's really key to get over 95% purity if you're going to be supplying that market, and they were below that level. Armadale's aiming to be towards 97% rather than below 95. So it's quite difficult to get a genuine market for below 95% purity graphite, let alone a premium price. Yeah,
because some people will look at Zero, for example, and benchmark you guys and other miners, graphite miners, to them and say, oh, the graphite market, it really isn't, there isn't much demand, blah, blah, blah. But what they might not be understanding is that if you're starting with high purity graphite, you have got an in-demand product, because the upscaling to battery grade is still going to be cheaper than synthetic, whereas upscaling from, say, 92% up to battery level grade might be more expensive than producing synthetic, or not much more of a trade-off. So I think that's the point I'm trying to raise, and you seem to have answered, is that given we've got such high purities, probably some of the highest, we are well placed from that perspective.
Absolutely, it's key for the Mahenge region. I think even POSCO's been, which is one of the biggest traders in the world, they've done a deal with BlackRock, which is also a Mahenge. It's just, they've got a similar rock sequence to what Armadale's got, so they're chasing high purity as well, and they are one of the biggest players in that space. So, sort of says something as to what they think as well.
How developed is the graphite mining industry in Tanzania?
It's got a lot of projects which are heading towards development, but none is producing yet.
None are producing. And most of the graphite in the world is sourced in China. Is that right?
That's right. Yeah.
Okay.
They also process almost all the graphite globally as well as produce it, but they need to supply better quality graphite than what they have.
So you've actually got you've got a slide on China driving the graphite market globally here.
Yeah, forecasts are showing that there's going to be a severe supply deficit in China heading into the 2020s. So it's a good place to be where we are.
Yeah. So who's the most advanced graphite developer then in Tanzania at the moment? Would it be BlackRock or other?
I'd say BlackRock would be the most advanced. Also, Walkabout are very close to getting to the next level as well. They've got a similar strategy of high grade, smaller production to what Armadale has. So,
where do they sit in terms of proximity to the Mahenge project?
They're all in the southeast of Tanzania in the Graphite province.
Mahenge is the province, is it, or is that the name of the town?
Mahenge is a town, but the BlackRock there. So they're all the projects are in southeastern Tanzania, and then they're not too far apart.
Right, because I've heard you describe it as a world-class district for graphite.
Yeah, Mahenge's got the highest purity graphite around. So BlackRock will be able to achieve 99% purity from flotation alone, which is almost unheard of.
Right, and it's 99. Is that the EV battery?
99% concentrate by just doing a flotation process out of the ground, and then simple flotation before it's even downstream processed up to high levels.
Right, so it's what is it? It's very high value. It's very high value concentrate then.
Yeah, very highly in demand, because if the standard is 95%, you're able to produce 99% from at least portion of your product, really towards the very high end of product purity.
So what's the read-through processing outcomes then should be similar then for Armadale's project? Is that right?
That's what we'd expect. Yes, seeing we've got a layer of rock, even the same layer of rock that BlackRock have. We have that same layer on our leases as well.
Have you done metallurgy studies on this as well?
Yeah, as part of the feasibility study, we've done some similar feasibility study to what BlackRock have done, flotation test work in Perth.
Right. Okay. Thanks.
So Matt, with the likes of the US and Europe ramping up EV production and trade tensions with China, and China becoming a net importer of graphite potentially, where are the US and the likes of Europe going to get their graphite from, especially for batteries? I mean, Tesla have only just set up a gigafactory in Nevada. There are hardly any graphite projects or large-scale graphite projects in the US that I've seen. Do you think that they are going to become a potential market? All your offtakes at the moment are Chinese-based. Have you seen any interest from any other regions, or do you think it's going to come?
They need to develop their downstream processing industry outside of China, which is, I know there's a lot of emphasis, particularly from governments, to move some processing technology outside of, or plants outside of China, so we're not completely dependent on the Chinese market. That's happening slowly at the moment. There's plants, gigafactories going around all over the place to produce battery grade material, but they're in the process of being built yet at the moment, sorry. But at the moment, almost all processing is done in China. And also it'd be, I'd expect the majority of the future graphite production going to US and to Europe to come out of East Africa, seeing that's clearly the best resource region globally.
Shall I move on? Anything else on the graphite market?
Just about the pricing. In the DFS, you used a pretty conservative figure of, I forget, it's $14. I think it was $1470 for
a bit less than that.
It was a bit less than that. You're speaking to your offtake partners. Are they north or south of that?
We're looking at doing it. The MOUs are based on the basket prices at the time, at the benchmark prices basically, which are published amounts. So we used fairly conservative prices in our feasibility study compared to all the other companies. I think we used one of the lowest. $1,112.
Oh, that's what it was.
Feasibility study. Other companies using $1,500 or higher.
Right. And the benchmark at the moment for the stuff that you're going to be producing, what is that now?
It's a bit higher than that.
A bit higher than the 1,500, or a bit higher than
a bit higher than the 1,100 that we're using. Not actually higher, but we wanted to be more competitive with our study. I think it's already exceptional economics without pushing that up.
Yeah. Okay.
Andrew, I've gone to this sensitivity analysis slide. Perhaps is that quite relevant to your question there? Sorry, I just I see you were asking about different pricing levels. Matt, maybe you could go through this a little bit, because I don't really understand this slide.
I think that's a new slide, so it'd be good to hear about that.
You can see the base case. Base case is $430 million. If you change some of the parameters by 10% or 20%, you can see how that will affect the NPV of the project. So if we increase the price by 20%, the NPV goes up to $588 million. We reduce the price by 10%, it goes down to $350 million. So you can see how the various criteria affect how economics of the project. So you can see it's quite price sensitive, it's sensitive to grade. Also, it's not particularly sensitive to capex. So if we use the prices that other companies are using, our NPV would be higher than 588 million.
Right. So your base case is, are you saying it's lower than some of the other companies then?
Our price we're using is, for our feasibility study, is quite a bit lower than other companies. But we think that price
430 is that?
The price is 1112.
All right, got it. Life of mine average sales price. Okay.
Yeah, and that produces an MPV of 430 million. If we use high prices, we'd get 509 million or 588 million.
So who's using 509 and 588? Are there other companies?
That's the MPV. That the price is 1,223 or 1,334.
Oh, got it. Okay, yeah.
Other companies using higher prices than even that.
Oh, really? And how many companies? How many listed companies are operating in the region? So there's Walkabout, there's BlackRock, and
there's Cabaran. There's Vault Resources. There is Graphex. There's quite a few.
So in the feasibility, the headline numbers you used at 1,112, right?
Yeah.
Is that right?
That's
okay.
right, yeah. If bumped it by 10%, would be 1,223.
Right, and whereabouts are the graphite prices now?
They're a little bit higher than what we used. I can get those figures for you, but they're high. We use conservative figures.
Yeah, pretty conservative. Actually, I didn't realise this at all. So, I mean, you know, it's getting to the telephone number stuff. I guess if you do raise that by 10, 20% or whatever, you know, I haven't really looked at the feasibility studies for some of these other companies.
Yeah.
So 20% higher price, you're almost adding 50% to the MPV.
Yeah.
Looking at your competition and your MPV figures, how would you, and the purity of your product, how would you place yourself against your competitors? Are there competitors producing the product of the same quality at lower prices than you have factored into your MPV?
BlackRock are likely to produce a very similar product because they're mining the same layer of rock in Mahenge as well as we are. We've got a slightly high grade, quite a bit high grade deposit. They're planning to use a mine at a faster rate, and as a result, mine more with a higher strip ratio at a lower grade. So that's why their economics aren't as good as what we have. We're mining a high grade pod, whereas they're mining a much bigger unit of the same material. So they're bigger project overall, producing a similar product. Their prices are higher than what we're using. The other company that's more similar to quite similar to what we're doing is Walkabout. They're mining a smaller high grade pod like we're planning to do, and they have very good project economics as well.
But they're not in production per se. So when you hopefully, and all these figures and time frames come together, you would place yourself in the top 10% of East African producers of the highest quality graphite? Can we make that sort of assumption? So we can
highest purity. I'd say highest purity. There's different types of graphite. I think Walkabout has more coarse graphite, which is more used for graphite foil and other different and expandable graphite. So they're producing a slightly different product to what we're using. We're more similar to what BlackRock is producing. So there's different kinds of graphite, different prices, different markets.
Yeah.
So it's hard to compare if we're the top 10 because they're not exactly comparable in every way.
Well, I like the way you've been conservative with the spot price or, the market price available at the moment. That's always going to be to your benefit and to shareholders, I think.
You'd hate to get negative surprises at a later date when
I think that's business sense to look at the negatives before you start shouting out about the positives in a way. So thank you for that.
No worries.
It's right for the EV sector, which is what your target market is, that medium and large flakes, high purity is the perfect feedstock, isn't it?
Smaller and medium flake are for batteries, and then larger flake is for foil and graphite, expandable graphite for graphite foam and things like that. Your purities actually go across all the flake fraction sizes anyway, don't they? But you've got a good distribution in the sort of the medium flake size so your basket
your concentrate will be very, will be very amenable to the sort of the UV sector.
That's right.
And didn't you do some test work program? Didn't you take some of your graphite Mahenge product and do some test work on it and get up to battery purity grade?
We've done that. We've got to 99.99% for part of the. We've announced some that early on in the, well, a couple of years ago, I guess.
Yeah.
We're looking at a much more advanced project now, which, yeah, will be announced shortly. What we're going to do to show how we can go to the next level with our graphite products.
Mm.
We've got there's announcements on that previously.
Matt, this is a really good slide in your new presentation. I think it's definitely worth spending some of getting this out to the market a bit more. I don't know, once you put the feasibility study out, I guess it's in there for people to refer to, but probably gets overlooked quite a bit. I don't know if it's a done thing to put in comparisons to the prices that some of the other companies are using, but that was particularly interesting as well, I found.
Probably wouldn't make it very popular if you started doing that with all the other companies, but we're using the figures we've got, and people can assess whether they think we're right or someone else is right if they choose to.
Is there something in here about the price of graphite over time?
Not in this presentation. The last presentation had graphite over time.
Yeah, that was going to be another question for me, actually. Referring back to your previous slide, where you could see the demand for graphite increasing. Is the supply of graphite increasing at a corresponding rate? So, what are we looking at for long-term price-wise of graphite? I presume up.
Well, I'd expect that graphite from East Africa would come on stream sometime in the not too distant future to feed a lot of that increased demand. So I think that's got to be the source to feed that. I don't know where else that volume could come from. Right.
Okay. So, do you think there'll be enough from East Africa to match that supply, or is the other supply, the demand numbers? Do they far exceed what is East Africa is expected to supply?
I think there's a lot of graphite in East Africa, so some of them could expand. BlackRock in particularly could expand significantly because they've got a very large resource. So there's potential to get a lot of graphite out of East Africa to supply most of the world demand. But we think our project is going to be one of the lowest cost producers in that region, so we've got a good advantage there. Somehow there's going to be supply coming out of East Africa because the demand just is there.
And I guess as that all picks up, it must there must be sort of synergies and economies for you in getting the stuff out.
Yeah, there's potentially some. Yeah, obviously the port could be more suited if people start producing, it's going to be more amenable to exporting graphite. There's going to be more people transporting it there. There's a rail that could be utilised as well from Mahenge, or from near Mahenge, about 80 km from Mahenge. There's a rail. If that was utilised, that would drop production costs further. So there is scope.
Right.
In this.
So even though they're producing more, it helps you as well.
Yeah, if they're in the same region, which most of them are.
Right. Okay. Thanks.
Hi, Matt. Hello.
Hi.
Yeah, sorry, just a quick question on the, basically your documents are all about what's going on now, and that's fantastic. What about the other 75%? What's your expectations for the rest of the site in terms of demand and the potential that sits on the site itself?
Yeah, there's a lot more graphite on our lease than we've used in our 15-year mine life. You can see that from this slide, the current mining area is a relatively small area up here. There's a large resource we know about to the southwest. There's more graphite to the northeast. There's another graphite ridge which we know to the in parallel to this one. So there's a lot of graphite on our lease.
Yeah, so is it the case of just extending out, or would you have to build a new mine somewhere else on the plot?
Well, I guess we'd probably move the plant from where it is further to the south west to get this future mining resource area.
Right.
That's the likely spot we'll go next. But I guess the 75% is large in that area. So that's that 45 years in that region.
Cool. Thanks.
There's plenty there.
What would you do? Would you bring in a phase 3, or is it just looking too far ahead? What's the life of mine at current on the?
15 years in that blue circle area.
Right. So yeah, that's a lot. You know, it's a long time away.
It's a long time, and there's
this is an interesting bit. I was wondering about this. You've modelled the DFS on inferred tons after year 10, and etc. So, would you? I mean, you've got measured and indicated for the first 10 years. I mean, is there an amount? As part of the next phases, would there be more, say, resource definition drilling to increase that confidence for the mining, or would you look to just do that as you go along, or how would that work? When you're really getting into, mining's a very, very technical game, right? It's all about trying to shift as much high value dirt as you can, and having the confidence to do that rather than processing. I guess dirt. You want to be processing the graphite itself. So, have you thought about that kind of going forward?
Yeah, I think it'd be the smartest thing to do would be to infill drill the first, say, 10 years, and then try and get that better defined to try and find more of that at the high level. We can bump the grade up in the initial years. That's where you get the biggest cash out 10 plus years. It's a long time to wait to get that money in. So you're better off to process the highest grade material, which we think we've got in the first 10 years. So if we can get that up a little bit, up 1%, say, that would increase the project economics further.
So how many square kilometers is this mining license, or the kind of?
It's roughly 8 square kilometers.
Right, and how much is taken up in the mining area? Then 25% of that, would you say?
Oh no, much smaller than that. Much smaller than that.
Right.
8 square kilometers includes, the processing plant, the tails dam, the waste dump, and all the future mining area. It's quite a small area. You can see in the first image, you can see the 15-year mine life in the side of the hill there. You can see the sites that we mined over 15 years. If you go back to this first slide, that's 15-year mine life on the side of the hill there. And the blue is the mining license itself in the blue rectangle, bright blue rectangle, further up, yeah. Can you hear me?
Yeah.
Go on to mute. Hello?
I can hear you. Sasha's gone very quiet.
Sasha's gone quiet.
You're muffled, Sasha.
Okay. Can you hear me now?
Back. Yes, you're back. Yeah. So the blue in the blue rectangle at the top of the hill there, that's the mining license. There. Yeah, that's the mining license. Yeah.
Have these areas here been sterilized?
We're doing that. We're planning through that. It's the next phase of work. But you can see on the side of the hill there, that's 15-year mine life of the high grade material. So it's relatively small area compared to the size of the mining license.
Mm. Do many of these other projects have such huge exploration upside, let's call it?
It depends. They have different situations. BlackRock has a very large resource already. So other companies have small, high grade. There's a variation.
with so much unexplored, or so much available to you, such a compelling MPV, are you worried that essentially once your permits and mining license drop, that I mean, you've got such a low market cap at the moment that you'd be M&A, people would essentially want you on the cheap?
Well, I hope that if that happens, I hope the share price goes up. That's all I can say.
Is that something? I mean, it's so compelling that you can't help but think. Do you get any indications from the Chinese that they looking at that kind of thing, or is that something you're oblivious of?
I think there's more finance groups who are looking to fund these kind of things because they know they're going to get their money back if they put their money in. So I think that's more likely source of funding for us rather than a Chinese group. There are Chinese groups looking to supply some of the equipment and supplies who can fund part of the project because they'll obviously get the contracts for that. I think most of the project funding is more likely to come from a Western source.
Okay, so I mean, everyone loves a bit of M&A, but you see it more likely progressing to the mine rather than that.
I think we can. My objective is to try and build this into a mining company to actually start producing graphite from here. And
okay.
Yeah, I just went back to the project economics slide there. You've got a lot of MPV to play with, I guess. In the how does that? Well, how does that fold into some of the conversations you're having at the moment? I mean, you've got a lot of fat there that you could give away without diluting too much, I guess.
Yeah, there's a lot of potential here.
Right. Is there any other particular slide you want me to go to, Matt?
Well, maybe just go to the next slide in the sequence that we had.
We did, yeah. So you were on the project. Look, I don't think you've done this one.
Yeah. So we're down in just south of Mahenge. There's a railway at Infakara up to Dar es Salaam. Existing railway. We went and saw that last time I was in Tanzania. It's an interesting train there. It's operational. So yeah, it's 80 kilometers north of where we are. They've improved the road since we were there the first time. So there's now a bridge across the river. It was a ferry the first time I went there, which was interesting. Yeah, so infrastructure is getting there. It's getting better. It's quite well located. So this is high-grade mineralization on surface, so we can get straight into the high-grade stuff. This is almost 20% grade at surface in the image in the photo there. One of the drill pads, and that's the pit outline over the topographic image of the site. We did a 3D model of the mining license, so you can see where the hills are and how everything fits in together. The drill holes are those little dots on the screen there, diamond holes in red. So yeah,
You've been through this one.
been through this one, yeah.
Okay,
so mine the deposit sequentially, starting from the stage 1 pit, which is down the bottom in red, jump up to the stage 2 pit, and then obviously go through the stages 1 to 6 to try and maintain a good grade and with the highest grade in the initial years if possible. So that's why it's been staged like that. With initial, this 60,000 or 53,000 to 60,000 tonnes in the first 3 years, bumping up towards 120,000 tonnes. In year 4, average life of mine is 109,000 tonnes per year. So you can envisage how it would be sequentially mined in this slide.
Does the feasibility study have a stage 1, stage 2 in it?
Yeah, stage 1 is producing between 53 and 60,000 tonnes per annum, and then it jumps up to around 120,000 tonnes in year 4. So we're increasing the throughput to 1 million tonnes per year from starting at 400,000 tonnes.
No, I meant the NPV. So the NPV. Oh no. Okay, sorry. It's modelled over a 15-year mine life.
Yeah.
Right. 6 stages of mine development. What's that?
So those are the six stages in the image on the left there.
Mm-hmm.
So we start at stage 1, mine material from that spot, and then jump up the hill to stage 2 in the darker blue. So that's where we'll get the ore from in those various years. So that's planned through the feasibility study.
Okay. Do you want me to go on through?
Yeah, maybe the next slide.
I think. This is the
Economics.
new favorite slide. And then
this is a summary of the key outcomes of the feasibility study. The life mine revenue of 1.8 billion. Net cash flow of 985 million, and all the I guess outcomes of the feasibility study, which we released a couple of months ago now.
Right, I think that's this version. There's no more slides in this version.
Yeah.
I guess. Should we? Any questions?
Any questions? Yeah.
Maybe you can recap on the news flow to come. Then you're working on funding, you're working on binding offtakes, and you've got the mining license out there as well. I think you had a slide.
Yeah. The permitting, back to that slide, yeah. Environmental social permitting, MOUs going towards binding. Project development funding is pretty key as well. If we can get that lined up, expect to really see the value in the company start to be realised.
Yeah, what do you think's going on at the moment with the valuation? And can you, what was the warrants and the block listing? I mean, can you talk about that a little bit? And I guess the market
had quite a lot of warrant money come in to fund. That helps really put the company in a strong financial position, probably the strongest position it's been since we started the company. So really helps to get that money in. So.
Are there many more warrants out there?
I think there's around 100 million or so in that region, which will bring in around close to £3 million as that comes in. It'll put the company in a very strong financial position as that money starts to come in, which is already starting to come in now.
So what would be what's the capex of the project again? Actually, I was looking at that.
The capex is roughly 39 million USD. Right. That includes contingency as well.
And would you do what split with debt would you do?
I guess it's ultimately up to the project funder, but I think typical ratio would be 70% debt, 30% equity.
Okay, so 30% of that's what, about 10 million? No.
Yeah, 11 million.
Okay, so it's quite a realistic number to get through a combination of different potentials. Look, I think this is the area which I'd say, I'd speak on behalf of people on the call, but that people are interested in here. What the next stages are, how that might look, what you're going to do. I don't think, it's very unrealistic to think that you're going to raise that in the UK London market type thing, which is probably a good thing in the project. People always think, they have to come to the market, but it's very, very tough in the London market to kind of get anything in the equity. So, and I guess that's not, how does that sit with everything and what you're working on?
Yeah, well, I think if we aim for 30% equity and 70% debt, it's much more achievable amount to get. And obviously with with 91% IRR, paying back debt is not going to be, getting the money is important, but being able to pay back the debt shouldn't be a major issue.
But how are the funding groups looking at this?
Yeah, I think they're fairly positive, to be honest.
Okay. But as in terms of
thinking that it can be funded.
Yeah. Okay. Anyone else? Or should we wrap up?
Finally, last question is, obviously you're focused on the graphite project, but are you potentially going to look at other opportunities? Don't you have also some sort of gold interest at the moment as well?
Yeah, we have a gold. I've got a royalty on a gold project in ERC, which is its original asset. The gold market's looking pretty strong at the moment, so if that does get developed, it's going to be a fairly decent revenue stream for the company as well.
Okay, very good. Matt, I think you've probably covered most things that you want to. I was going to say, I think there's a lot to the story. I'm certainly a small shareholder, but there's so much here that the market doesn't know about. I definitely, recommend that you maybe do some more of these. Maybe obviously as news flow continues on these next, on your offtakes and funding arrangements. But I think there's you should definitely get out more. You've got a lot of numbers there which people don't realise.
Yeah, I am to do that, Sasha.
Very good.
Yeah, thanks for everyone attending, and thanks for Sasha for hosting.
No problems. Okay, I'm going to.
Yeah, thanks, Matt. Brilliant.
Yeah, very good.
No worries.
Thanks, Matt.
Thanks.
No worries.
Yeah, thank you. We'll get tweeting.
Okay, see you guys.